A certain Fed chairman's going to Capitol Hill. What does the market need to hear?
Well, I think the market needs to hear just a consistent message from what we heard from Powell already, that, we're not looking for any additional cuts, but we're not looking to change our overall accommodative stance. I think the Fed is continuing to be the tailwind that the market has been looking for and has really been the driver of the gains that we've had this year.
Wednesday and Thursday is when Chair Powell is going to be on the Hill. Can he do anything to upset the market?
I think he's been so consistent, and I'm continuing to rely on that. I love those words, act as appropriate, act as appropriate. That's what I want to hear as a portfolio manager.
Bunch of economic data out next week. So, along with earnings, you could have, I don't know if I want to say a pivotal week, but certainly an important one for the direction of the market if you can extend these highs that we're trying to get past, don't you think, Shannon?
Well, I just think there's what is going to upset the momentum that we look over the next 6 weeks or so. And we were talking about this earlier today. If you look at, making sure we're consistent from the Fed, making sure that we do see some relative progress on the trade side. And, if earnings continue to come in better than expected with some meaningful upside in consumer sentiment coming out of these CEOs, I think that's all going to be really important as we move into the holiday season.
I want to get through a couple of stocks as well. There were some calls. We like to do a call of the day. Generally, a sell-side research analyst comes out with a call on a stock upgrade, downgrade, or what have you. Foot Locker, upgraded to positive from neutral over at Susquehanna. Price target goes, and it's a pretty healthy jump, 55 from 43. You own Foot Locker.
I do. I think, the challenge with Foot Locker has been we all go online to buy everything now, and I think the same-store sales numbers have been somewhat disappointing. We've had some difficult comps over the last couple of quarters. However, the brands are still very supportive of the Foot Locker model, so as long as you have great sell-through of kind of new items that you can go in and get a fresh pair of shoes and that you are able to try them on and see how they look, I think Foot Locker is going to probably continue to be a little bit volatile, but should benefit from that over the next couple of months.
Certainly plays into the positive consumer story.
Exactly.
If you believe that the consumer is going to remain positive, then heading into the holidays, Foot Locker maybe not a bad place to be?
I would say no. I mean, we own it. We're going to continue to own it, and it might not be a bad time to pick up the stock.
Okay, let's talk Caterpillar.
Sure.
Jenny, price target goes to 156 from 130 at Goldman. They're still neutral on the stock. They bumped the price target up, and we started our show today talking about trade and tariffs and whether the agreement's going to be signed and whether tariffs are going to be rolled back. Is Caterpillar and are Caterpillar investors waiting, with bated breath to see what happens?
Maybe not even waiting with bated breath, but we own CAT. We've owned it for a long time in our growth portfolio. And the way we look at it with all the trade and all of that, we look at that as stabilization coming into the global economy. So when we think about CAT as an investment, we look at lower interest rates here and globally. We look at a stabilizing economy. We think those are very, very positive for CAT. And we actually think that analysts' earnings for 2020 are probably too low. So there could be positive surprises going into next year. Meanwhile, it's super cheap. It's trading at a 14 times multiple versus the market at 17 times and has a 3% dividend yield. So we love it, and we think it's a nice place to be for the long term.
Okay. We're going to take a question from the audience. The hot seat. Sir, what would you like to ask Shannon and Jenny?
Tom Hewitt. I live in the area. Watch the show every day from my desk. It's great to see you guys here live. I wonder about the outlook for Viacom. The CBS deal should close. The synergies, I guess, were underwhelming, but with all the content they have and the streaming services that are proliferating, it seems like there should be some value there.
Who wants to take that? Shannon?
I can take that. So I think that the competitive nature of the content market right now is really what's most important. And so if you think about it in terms of, the different platforms that you can access content on, I think that we're going to increasingly be forced to try to figure out where we want to see that content. I think from a value perspective, there is some value in the Viacom name, but I would, as an investor, I'm more focused on where do I want to get my content? How do I broaden my basket of content? And so I think names like Netflix, which I know has been under some concern, some stress, is certainly, but that's an interesting place for me.